Hi, it's Sean Sandilands from Pulse Markets here. I'd just like to thank everyone for attending. I'd like to welcome Justyn Peters from Leigh Creek Energy, the chairman. We're here to discuss the recent announcements from Leigh Creek Energy, which we find quite favourable. And welcome, Justyn.
Thanks, Sean. Thanks for the opportunity to explain some of the developments we just moved through.
Justyn, we find these webinars where we're interviewing people like yourself a really good way for companies to get in touch with their shareholders and investors. Sometimes people can't get all the information out of a report that they need to understand. And I think your recent announcement about a capital raise is a good example here. We would really like to see some colour on what it actually entails. So today I've got a couple of questions which I think investors would like. Okay, the first question I have, Justyn, is that Leigh Creek Energy recently announced that it completed a capital raise for up to 18 million. Can you please explain how this raise was structured?
Certainly, Sean. The capital raise was a raise up to $18 million Australian, and it was done through our US advisors, EAS advisors out of New York, and their US investor, Energy Exploration Partners. The actual raise itself allows us to draw down a maximum of 18 million on 3 tranches at $6 million per tranche. We don't have to issue shares for each of those tranches until the investor requests that we issue the shares. So you'll notice that within the announcement we stated that the setting price was 32 cents. So we've drawn down tranche 1, for instance, for $6 million. If the investor requests us to issue the shares for that $6 million in the next 60 days, then the price is 32 cents. Right? And that was structured for a reason. That was structured so that we were not going to be finding ourselves in the position that a lot of companies are, is that when they complete a placement, whoever they place to starts offloading shares quickly. And we wanted to protect our shareholders and our price and our position. So 32 cents was set as the price if they converted or wanted us to issue the shares in that first 60 days. Outside of that 60 days, a different formula applies. So after the 60 days, then it is a 10% discount to a 5-day VWAP. And that 10% discount is very reasonable. Anyone knows who does placements in the capital markets, a 10% discount is not unusual, and it was quite a good price, and we were very happy with that. There's even within the subscription agreement and with the agreement we had with this company, an incentive for them not to sell shares in the first 12 months even. And that was that instead of it being a 10% discount to the VWAP, it would be a 13% discount if they converted and asked for the shares after that 12-month period. So that's your basic structure. I know we'll go through in more detail on some of the other issues within that.
Okay, thanks, Justyn. With this placement, does Leigh Creek have the ability to pay the 6 million back on the first tranche in cash instead of shares?
There's a couple of things there, Sean. The quick answer is yes, but I'll explain how and why. The first thing is that we don't have to go ahead with tranche 2 or 3 if we don't want to. So say in the next 6 months, the markets change, we have a strategic shareholder that comes in and invests in the company, then we don't have to draw down tranches 2 and 3. And that was an important option we wanted, and it was an option that the investor was happy for us to go ahead with. So providing we complied with the subscription agreement, so that had issues in there, for instance, of solvency, disclosure, compliance with the stock exchange, those sorts of issues, then at our election, we could draw down tranche 2 and 3. On each of those tranches, we have the ability that when the investor calls for us to issue the shares equivalent to the value of the tranche that's been drawn down, that we can pay it in cash rather than in shares. So it's at our election that we can do that. And so it gave us a lot of flexibility in that firstly, we could draw down tranches 2 and 3 at our choice. And on all tranches, if we wish to pay in cash rather than shares, we could do that.
Okay, great. Thank you. As stated in the announcement, you've got an investor from America this time, not Asia, which as an advisor, I was quite pleased with, because obviously with Australian tensions with China at the moment, we see that it's been a bit of a hindrance for Leigh Creek raising money in the future. With this investor coming from America, Is there any FIRB implications?
I mean, I think you're correct, Sean, in that whilst we have a very, very strong Chinese connection with SOEs, we've been working closely with China for years and will continue to do so. And hopefully the relationship will improve between both governments. But we thought it was important that we look outside of our Chinese partners to raise any money because of the issues there and the concerns. And we even see announcements, in the last week where the Treasurer has actually stopped another acquisition by a Chinese company. So we didn't want to expose ourselves to that risk and work hard with them and find ourselves in a position where at the last moment we were declined or they couldn't invest in us or buy shares. Our company situation changed slightly over the last 4 or 5 months, and that is that you remember that we were granted a petroleum production license. And that changes the status of the company from FIRB point of view, because prior to that, if you had an exploration license, you were not considered an Australian Land Corporation. And if you were not an Australian Land Corporation, then the zero hurdle or the $0 hurdle didn't apply. Once we were granted a production license, then the government then deems that we as a company are now an Australian Land Corporation, and that anyone invests in us has to get FIRB approval subject to certain exemptions. So the fact that American doesn't change anything from a hurdle point of view. So it's a $0 investment is the hurdle. So anybody who invests in Australian Land Corporation, if they go over 10% investment in that company, they need FIRB approval. So we made it very clear when we went through working with their lawyers that we would restrict any investment in the company to a maximum of 10%. So how that worked was that if we drew down tranches 1, as long as it fitted within our 7.1 capacity, and as long as the number of shares they held in the company left it in a position of lower than 10%, we were fine. If we went to tranche 2, and the shares, the equivalent of that tranche, took them over 10%, we were restricted. And that is, we couldn't do that. So either the investor would have had to sell down some of their shares so that they could then take the next tranche and still stay under 10%, or our market cap had moved in that time frame. So as I said, we were very concerned about the FIRB issues, and our American investors were really good about this. The subscription agreement made it very clear they couldn't go over 10%.
Okay, thank you. So I guess this also ties into my next question. A potential takeover from this group, has that been eliminated?
Look, it has been. Everyone's concerned. Everyone knows that the standard position at 19.9%, you can only go over that position with shareholder approval. But because of the FIRB limitations and what we built into the subscription agreement and our agreement with the investor was that they would not go over 10%. So by the mere fact of that FIRB restriction, it's not possible for this company to go over the 19.9%. They simply cannot own more than 10% shares in the company. So we had that double protection of the 19.9 needing shareholder approval, but they can't get to the 19.9 because of FIRB. I mean, I do understand your question there, Sean, because everyone's concerned when you do placements, does it expose the company to a potential takeover? You've always got to be concerned about having a tiger by the tail. But with this investor, being an American investor out of New York, we're very, very comfortable with who they are, have known them for quite a while. Our advisors and us sat down and talked to them at length about these issues and came up with a great result where takeover really is not a possibility unless some approach was made formally outside of the subscription agreement and placement.
Thanks for that, Justyn. And lastly, just on this, are there any trading restrictions on the shares?
I mean, all companies are concerned about this one issue, especially your smaller companies on the ASX. Your BHPs and UREAs don't have this problem because they have such liquidity that when you have shareholders that have done placements, they can move in and out and not impact on the price and the strength of the company. So one of those natural provisions that you look at is an anti-shorting provision, which we have in this agreement with them. And there are strict trading conditions that apply as well on volumes that can be traded at any time and over a period of time. and they are all built into the contract.
Looking at other shares in the energy sector, something that came across our desk last week was Strike Energy. They recently announced that they are going to be producing urea out of Western Australia. How does this impact the Leigh Creek project?
Without wanting to comment too much on the strike announcement in the last couple of days, there's some good things about the announcement to start with. And the first is that it clearly recognises its commercial attractiveness in producing urea in Australia. The fact that they've recognised that simply confirms and validates our business model that we can go ahead with urea and there's an opportunity here. But we have several advantages over any other Australian company that's proposing to manufacture fertiliser and urea. And the first is that our input costs are lower. How you make urea, you require gas, you get natural gas normally, and then you'll convert that natural gas across to syngas. And there's a cost involved in acquiring the gas in the first place, natural gas. It has its price. It varies on the East Coast between $8 and $12 a gigajoule, right? And then you've got to actually swing that gas across to syngas, which has a cost impost as well. And I'll give you an example, and I've used this example once before, but I think it's important when you put it in perspective with the announcement that's just been made, how difficult it's going to be for anybody to be able to compete with us on a price level. And that is that, let's assume that a company can obtain their gas at $5 a gigajoule. That's really at the lower end of the market, and that includes converting your gas across to a syngas. It's possible, I guess, that you could do it slightly cheaper. It is more likely that it's more expensive. If you work on approximately 30 gigajoules of gas for a ton of urea, that number depends on the efficiency of the plant, how new the plant is, what technology you use in the plant. But 30 gigajoules is a reasonable number to assume. If you're paying $5 a gigajoule for your gas, and you have to use 30 gigajoules to produce 1 ton of urea, then the input cost for gas alone is $150 per ton of urea. We can produce gas at approximately $1 a gigajoule. You now look at that same 30 gigajoules for 1 ton of urea. Our gas input cost is $30 a ton of urea. That gives us a competitive advantage over probably anyone in the market of about $120 a ton. You've got to remember that $120 a ton at cost advantage is for a product that sells between $450 and $600 a ton. So it's going to be very, very difficult for anyone to compete with where we will be when we get stage 2 completed. And we're pretty comfortable. This puts us in the lowest cost quartile for urea production anywhere in the world, let alone Australia. So as I said, their announcement simply validates that there is an opportunity here and one that we're going to go for very hard.
That's excellent. Thanks, Justyn. Can you just let us know why this raise was so important for LCK or Leigh Creek Energy?
It's extremely important because it allows us to rapidly progress stage 1 of this project. Right? So we are now close to awarding our EPCM contracts for stage 1, and we'll update the market very shortly on where we're at with that. But it allowed us to move forward on those contracts now that we were funded. It meant we had certainty of funding, which was incredibly important to me and to my board, that we made sure that we had sufficient funding to move forward quickly rather than sitting on our hands for 3 or 4 months waiting for the next raise to move forward. More importantly, one of my concerns has been, and for some time it has been, that no one knows what's going to happen over the next 12 months, both in Australia and overseas. The uncertainty and the volatility is going to be huge. If you think about, we have COVID and the volatility in the markets that's causing, we see with a New South Wales lockdown or a Queensland lockdown or a Victorian lockdown that it makes a dramatic difference on confidence. It makes a dramatic difference on how you can hold meetings, road showing for finance and for capital, meetings interstate makes it very, very difficult. You end up being restricted to Zoom and team meetings because you can't sometimes take the risk of getting into another state and a lockdown occurring. So that volatility created by the COVID situation meant that at any time, if you were getting into a position where you needed to raise money, then you could run into some serious headwinds because of a COVID development. One of the other issues that we were concerned about also was that the fact that the issues going on in America at the moment with the US president and with Biden It might start to sort itself out next week. I noticed, I was reading this morning, that they were saying they would wait the first 100 days before they start an impeachment process. I don't know whether that's true or not, but what that shows you is that the next 100 days of politics in America are not going to be straightforward and clear cut. And that impacts on the US market, which in itself impacts on us. So we're concerned about that. Another issue we're really concerned about was the Australia-Chinese relationship is just continuing to deteriorate. And at the deterioration, it meant that it limited our opportunities to be able to raise money with our partners. So given that we had the COVID situation, that we had the US situation going on, we had the Australian-China relationship getting poorer, we decided it was very important that we obtain this funding before finding ourselves in a February-March position looking for funding. Another unusual, I would guess, a lot of people would think, benefit for this is that by doing this raise out of the US, if you have a fairly bullish view of the Australian dollar versus the US dollar, if you think that this raise was done at 77 cents on the equivalent on the Australian dollar to the American dollar, that at some stage later in the year, the Australian dollar is going to be a much higher price. So you'll find that by doing this deal with an American company, it does make life a lot easier for us. I acknowledge that the whole deal has been done in Australian dollars, so the exchange rate should not make a lot of difference, but it does make a difference on some of the terms. So, as I said, we were nervous. We had to admit we were nervous about where the markets were going to be in the next 3 months. And we did a very unusual thing, and that is that we did a capital raise between Christmas and New Year. People were telling us that you couldn't do a raise anywhere in November until mid of January. And our team worked hard through the Christmas break, but also the US team worked very, very hard to make sure we got this placement completed and finished in a timely fashion, and we did.
Congratulations, that's excellent. What are the next steps for Leigh Creek over the next coming months as you move forward and progress after getting this money, this certainty in the business? What does that enable you to do moving forward over the shorter term?
There's a lot of things we have to do, Sean, over the next few months and certainly over the next couple of years. There's the operational side of the business, which I'll talk about because the funding actually allows us to progress that a lot faster. But there's the ones that everybody sits back and waits to hear about and wants to hear the news on it, and they're no different than the people in this company, I can assure you. Securing an offtake agreement. We'd hope we'd have it finished. We hope we'd have some of them finished before Christmas. Unfortunately, just by the time it starts to get to the end of November into December, one of the people we were dealing with actually went on, as a company, went on holidays in the second week of December. And because of that, we just had to put everything on the back burner, secure the funding, and then get back to work this week, literally back to work this week and starting on those offtake agreements again. That's just negotiating with those companies we're working with. Secondly, everyone looks at the three biggies here: an offtake agreement, a strategic partner, and how you're going to fund the project. Right. And we took the position that an offtake agreement was going to be extremely important. Previously, and I think I've mentioned this once before in one of the discussions we had, Sean, was that our partners in China had sufficient bank accounts to be able to write a check for the project without even blinking. However, as I said, since we started with them and worked with them, that situation in Australia had changed quite dramatically with China. So we took the position we had to take a slightly different tack in order to be able to raise the money. And it's a lot of money we're going to have to raise for stage 2. So we took the tack that, okay, we're going to need offtake agreements. It was a nice to have in the past, an offtake agreement, but an offtake agreement with a bankable party now becomes crucial for us in that it gives certainty to anybody that's going to fund or finance stage 2 with us that we have someone that's going to actually be able to take our product in sufficient quantity, right, to be able to make sure it works. The other thing we did was that we've broken this project basically into a stage 1, stage 2 process. And the reason for that was stage 1 can be finished very quickly. We can get in, for instance, we've done the pre-feasibility study. We've had our petroleum production license issued. We're about to award the EPCM contracts for that. We're in the process of going through the environmental impact reports and statement of environmental objectives with the government. Field development plans we're working on, and then we'll go to FID. But we should be able to have all those things on stage one done by the end of this year, 2021. That's important because what that meant was that anybody that was going to come in and look seriously at investing with us on stage two, which was the urea plant, then they would have two things that gave them certainty. Well, three things. They had a government license. We have that license. There was no uncertainty over that. The second is we have an offtake agreement, so there's no uncertainty about the marketed product being wanted. And then the third was they could physically stand at site and see the gasification process, see the outcome, see it generating power, seeing that gas being used to generate power at the site. So that then all those boxes were ticked. The technology works fine, the process works fine, it's reliable, it's in a steady state process because it's operating a 5 meg power generator. They get to see the actual location itself, where it is, they get to see the infrastructure around it. And that was the process we're going through. We complete stage one and then we complete stage two. They were parallel processes. So stage one, we're working through right now, and we expect, as I said, to get things up and going, and we expect to have that by the end of this year. Stage two is also running in parallel at that time. So the PFS for the downstream has actually been finished. The feasibility, the pre-feasibility study for upstream has been finished. The EIS for the ammonia plant and the urea plant is in progress at the moment. And a lot of the information that's in stage one will feed into that EIS. The EPC we're working through at the moment and plan on that. The full feasibility study is being worked through at the same time. And a lot of the information from stage one feeds into stage two. So, you know, we're pretty comfortable that now we've got the funding that we can start moving into stage one very quickly, that when we get that done and working in parallel with stage two, you know, we've made huge strides. And we're pretty proud of the fact that a lot of this stuff that we're working on and a lot of the announcements we made in the past, you know, haven't impacted hugely on a market acceptance or the share price, but we've just been methodical. We're just working through each one of these things. We know that, you know, it gets us closer and closer to that commercial stage where we're actually generating income. So, you know, it's pretty exciting. It enables, this capital placement enables us to get started and get moving very quickly on stage one and stage two.
Thanks for that, Justyn. Just as a side note, I've just looked at this 60-day placement rule that you've got in there. At 32 cents, then it's done at a 10% discount to VWAP.
Yeah.
Are you guys expecting anything to happen that too much, which could push the share price up in an upward trajectory to actually get that VWAP a lot higher than 32 cents? Is that also a little bit of the motive there?
Well, no, that's very true. I mean, if you've got good news to be released, then you would expect that good news to impact on the share price. But as you know, Sean, the markets are pretty fickle out there.
They sure are.
It's pretty difficult to predict where you're going to be as a result of any announcement or progress. You know, it's unusual. You think where the share price in the company was, say, 2 years ago, which was, you know, not a lot higher than where we are now, but it was higher. In that time, we've done a feasibility study. We've had our petroleum retention license granted. We've done the demonstration plant and proved that it works and worked with the government on that process. We've now been given a production license, which is an incredible achievement for the company. And I have to admit that it was a far quicker achievement than I thought. It was possible that we could have dragged on for a couple of years on that production license. And if anyone doubts that, just look at Adani's problems in Queensland. Adani bought that coal mine in 2008 and they got their final approvals in 2020. That was 12 years of work for approvals. And we got our production license approval in 2020 within 2 years of us getting our approval to do the demonstration plant and finish that. So, you know, you would immediately think that any company that's gone through all those processes, you know, it's been tackled in court, with an injunction by a particular group of which it succeeded. With all those hurdles in the way, we've got over every single hurdle. You would think that the share price would be substantially higher than it is now. And yet, as I said, the market's a fickle place. So it's a long answer to your question, Sean, but yes, we expect to have some very good announcements out over the next couple of months, but how that impacts on the market is just something we can't predict.
Thanks. One of the things I noticed, I was in Vietnam when you were doing the PCD, which myself and the investors were looking for announcements every day, looking for a supernova, is what we called it, to getting that hit bit when it flared. And we all had a big drink that night when you actually did it, and we were very excited. Putting that PCD together took some time. With you now building a 5 megawatt power plant, we'll be using the PCD equipment so that can sort of fast track things, or are you starting from scratch this time?
A combination. It's a combination of it. There is some engineering required for the 5 meg generator that doesn't incorporate the PCD, but a lot of the PCD equipment can be reused again. There's no problem with that. We've got to remember a lot of that equipment we put in was for monitoring the gas and for monitoring the impact on the environment. It was, I'm just trying to think of the right wording here. It was, I would say it was over-engineered, right? But it had to be over-engineered. We only had one shot at this. As a company, we couldn't afford a second shot at it. You know, if the first one failed, where we're going to raise the money to get a second go at it. And more importantly, I think, is that from an environmental point of view, we didn't have a second chance here. We had to make sure that everything worked, that our monitoring was working correctly, that our impacts on any water, groundwater, above ground, on the air, on the environment was monitored and recorded properly. And that, in a lot of situations, was overkill. However, you know, the government had to act cautiously, and as a result of them acting cautiously, we had to over-engineer. What that means is a lot of that equipment, right, will last an awful lot longer than it normally would for a demonstration facility. And we can actually move a lot of that equipment into stage one's process. So that will allow some of the engineering to be fairly quick. The other issue is that, you know, if you build a 5 megawatt gas power station from scratch, there's some long-term lead items in it. But the reality is there's quite a few 5 meg stations out there already that can be converted quite easily. And we're looking at those as well so that we can speed up the process. Your drilling lead times and your manufacturing of piping and your lead times aren't too long. You know, drilling is often a factor of what's going on in the market, and that is there a lot of exploration in the gas areas going, and then all the drilling rigs are actually engaged and you've got to wait for one to come through, or as exploration drops sufficiently so that there are plenty of rigs around. And we're lucky that the drillers we've used and the companies we've used are good companies and large companies. We don't think we're going to have any delays with any of them in the drilling process either.
That's fantastic. With the revenue that Leigh Creek are producing from the 5 megawatts, would that be profitable for that particular business, or is 5 megawatts sort of a break-even type of point when you're producing that type of electricity?
You could make some profits out of it. I mean, one of the things that you've always got to be careful of is when you're generating power is, are you in the grid? So if you're in the grid, then does the regulator regulate how much you can put in and when you can? There is the ability to actually be able to generate power outside of the grid, and therefore you can actually guarantee, you know, how much power you're going to generate, the price you get for it, and the consistency of it. But if you're not and you're in the grid, then you are a bit subject to the variances and the vagaries of the regulator, which is understandable. I mean, they have a bigger market they have to control, not just us. I would say this is more, it will produce revenue, but this is more a function of two other issues. It is more a proof, right, that the actual consistency of the gas can be used in the power generation. And it's also proof that's commercial. I mean, one of the requirements the government does have of us is that we can show that we can get to commercial position very quickly. And if we waited for stage two just to be the sole provider of revenue, then we wouldn't be able to get that done within the time frame the government wanted. So we're going to stage one where we're producing power and making revenue from that. We actually have then complied with what we need to comply with to keep moving. So it will make money. You would have to say in a normal investment, you'd probably go a bit higher than the 5 meg. but 5 meg is all that we need to get us going into stage 2. Once we get into stage 2 fully, then we'll have to have more power than that. But in the early stages, 5 megawatt gives us ample power for what we need.
How long do you think it'll be until you've got electric going into the grid?
It's a bit of a how long it's a piece of string question, and the reason I say that is because we're going through a couple of processes at the moment. We have state and environmental objectives. We've got the environmental impact report that's got to go into the government, which we anticipate will get in reasonably soon. And then they have to assess it and go through it and it with supplementary questions. But we're expecting, with all things going as fast as we've been able to do in the past, having it in by the end of 2021, you can end up with, a few months delays in there if something occurs along that way. If we run into problems on procurement, if we end up with more questions on the EIR and SOE, that's the environmental side of the business, that might delay us slightly more, but we hope by the end of this year.
Fantastic. Just one last thing, and I really do thank you for your time. The last webinar we saw your team presenting at, Bill Stavley was asked the question, the $1 billion that you got last year, has it got anything to do with the current investors in this latest capital raise, or would they be interested in progressing further with the funding for stage 2, having had that relationship with such a large amount of money? To me, I thought that was very significant that Leigh Creek could get access to those funds, being such a small market cap to that value.
It was an interesting thing, Sean, because people look at a company that's got a market cap, roughly 100 mil, depends on the market at the time, but roughly $100 million. And it's do the big boys, do the big funders, the big banks, do the investment companies, do they actually take you seriously? Or do they want to wait and see and just sit back and let you develop more until they get comfortable enough to start to talk to you, to deal with you? We were lucky. I mean, I always think the harder you work, the luckier you get. But we were very lucky in that we were talking to one of the world's largest banks, one of the world's largest fund managers. We had other fund managers in with us who were quite happy to come up with a very, very, very large amount of money that was, nearly 10 times our market cap. We're still working with them. The relationship, if anything, has improved with each one of those. We're still working very closely with them at the moment, because we're looking at the long-term future, as we said, of the funding arrangements for the company. So the fact that we could actually raise a very large amount of money gave us a lot of confidence that with a few more steps in between, that we would have no problems raising that money again. And that's what I was saying about the stage 1, stage 2, an offtake agreement, seeing is believing when you see the 5 meg actually producing. They're all fundamental to us continuing our work with these particular companies.
That's excellent. That's really good. Justyn, I really appreciate your time today.
It's interesting times, but as I said, we've worked hard. We're pretty comfortable with what we've done over the last 3 to 4 years, and we're pretty comfortable what we're going to do over the next 2 years. So stay tuned and we'll just keep you all informed.
Yeah, I think we put out as a house a buy recommendation out last week on Leigh Creek after you got the funding secured for stage 1, which we thought that will give you a runway for the next 12 months so you don't have to keep going cap in hand to the market. So
it is interesting, Sean, that, a smaller company, people get frustrated. I mean, shareholders get frustrated, investors get frustrated because everyone's sitting there hanging on for the big one. Whether it's the big one and the company's going to succeed, or it's the big one and it gives an opportunity to sell their shares at a profit and take some money off the table. Everybody sits around waiting for the big one. For us, there's like a big 3. We've already got one of the big ones. It was a production license. But I sat down and I drew up a list with our team about a month ago of all the things we'd achieved over the last 5 years. And it was pretty incredible. Like, you actually went through the list, and it was one of those things that was quite surprising, because at my level, as chairman, with Phil as the managing director, we're looking at milestone events that the company has to achieve so that we can actually be successful. But behind those milestone events are a whole range of achievements that lead to that milestone event. And when you break it down to each of those achievements, it is an amazing achievement, what we've gone through and what we've achieved. But from the public's point of view, there's frustration that, an offtake agreement's taking longer than people would like. It's taking a lot longer than I would have liked too. But you get a pleasant surprise when you get a production license much quicker than I thought we'd get. So there's swings and roundabouts in there. I'm sure, given the success we've had in the past and the achievements we've made in the past, nothing's going to change there. We're going to keep along that same path now.
Thank you very much for your time today.
Okay. No worries, Sean. Thanks for speaking. I look forward to talking again in the near future.
Thanks, Justyn. Talk to you later.
Okay.
Bye.
Good night.